What's up, party people? This looks a little different. I changed the lighting. I had an option to change the lighting. I don't know if I like it or not. Looks kind of weird. I don't know how to fix it, but whatever. So I've never done a pre-market YouTube before. It's like way too bright. Let me see if I can make the light a little lower. Hold on. Yeah, that's better. Pretty cool. It's like there was some sort of option for me to like change the lighting. Go like that. I realize that all my family's sleeping right now. So why not just do a YouTube now versus later today? Target Hospitality. First of all, I did a YouTube 2 days ago on Target Hospitality and on Bridge Bio. And I had a TV show playing in the background, The Price is Right. And YouTube took it down, saying that I infringed on their copyright. So that video is no longer accessible to anybody that didn't watch it. And in that video, I talked about the opportunity in Target that I think just happened today. And I did a very detailed analysis of Bridge Bio, BBIO, which I'll do again maybe next week for anybody that didn't get to see it. But let's talk about Target Hospitality. So they just brought out the news that we've been waiting for, which is what the EBITDA hit is from the Dilly contract. And if you take the midpoint of the last quarter's guidance and the midpoint of the new guidance, and you annualize it based on the fact that it's from August 9th to the end of the year, they're losing the EBITDA, you get to about a $39 million annualized EBITDA hit. But they said in the new guidance, they are not using any variable, they're not putting in any possible variable guidance for the other government contract in the new EBITDA guidance. So who knows how much of that 39 million is that as well. But the moral of the story is it's basically exactly or in line with what everybody thought the EBITDA hit would be, which is 35 to 45 million. The most important part of the news is that they decided to put in the press release that TDR made a $10.80 bid, and that the committee is currently reviewing that bid, and they will update us, when they have a reason to update us. I've been spending the last hour and 20 minutes debating all of this with myself and some friends, and I can't come up with any reason why the sponsor wouldn't have pulled the bid in the last 2 weeks if they were going to pull the bid. Further, if the bid was lower than 1080 now, I just don't think that language is in that press release. They can, first of all, they didn't even have to update us on the bid. They could have just put out new guidance. Second of all, they could have updated us in the bid and said that it was dead. And third of all, the sponsor could have put a 13D out in the last 2 weeks saying that in light of the new information, they're bidding less, okay? As I said on my YouTube a month ago, or 2 weeks ago, sorry, I still think this makes financial sense for the sponsor at 1080. So the math at 1080 with no net debt at the end of the year is 6.55 times new annualized EBITDA of 165 million. And that gives no value for Dilly's assets, which I think are worth at least $100 million or $1 a share, probably more. And it gives no value for anything in the pipeline. So yeah, it's kind of like you have to play game theory here. What does the sponsor have to gain from keeping this bid alive if they don't have any intention to follow through with 1080? That's the first thing we have to answer. And I come up with nothing. Okay. They would rather have killed the bid today so that they could then buy back stock once the new guidance was put out. That helps them, right? But now they're restricted. There could be no buyback. So if you're in their shoes, you try to figure out how they gain the most from playing this out. And I just have a hard time seeing the reason for keeping something alive that's not alive. The only thing I can come up with is that they're expecting to get a new contract, either the third government contract or something else, and they're keeping the bid alive as a sham to then give us the good news of a new contract to soften the blow when they kill the bid. As I said 2 weeks ago, they own 65% of this, and they have no exit. This is a European private equity firm. This is the only position they have in America. And if they don't take it private now and then eventually package it and sell it to somebody else, they have to do that in the near term anyway, package and sell it to somebody else. So I don't see I don't see their exit or see the path except to take it private. Then you have to ask yourself a question: will the special committee agree to 1080 or $11 or 11.25 or something like that? A small kiss. And I think the answer is they will, because there's going to be a majority of minority vote. I think they could have cover with that, cover with the fact that even now the stock's still trading below $8 even after the guidance is updated. And you have to assume that some of the stock price is the bid still being there. So what would be the true unaffected today if they killed the bid? It certainly wouldn't be $7.99. It probably would be $6.50 or $7, or maybe even low sixes, at least from the initial reaction, even with the new guidance, which is as good as anyone expected. So if the unaffected, again, it's all speculation, would be mid sixes, then 1080 is pretty good. So what were they doing the last 2.5 weeks? Well, we know they weren't coming up with that number because we all came up with the number that day, right? Almost to the number, to the point. It was the range was 35 to 50 million, or and I think we thought it was most likely to be about 45 million, and it was 40 million, or we thought it was going to be 40 million, maybe 35 to 45 million. It ended up being 40 million. What were they doing? Well, I can assure you they were definitely talking to the sponsor, and the sponsor was definitely trying to figure out whether they wanted to keep moving forward with this at 1080. If they were going to kill it, I think they would have killed it. So anyway, I had some coffee and I'm extremely anxious right now. So I'm going to wrap this pretty quickly, but I would think that something could happen in the next 4 to 6 weeks, if not sooner. Obviously this is a sense of urgency now that this happened. The bid ask between the sponsor and the company should be much tighter now, right? They might have been asking for $15 a share before, and they were going to narrow it down to 13 or 12.50 as they went back and forth. Now it's probably a question of somewhere between 1080 and 11.50. A tight band, and I can't see this breaking over that small of a band. It's in everyone's best interest for them to sign a deal. And, quite frankly, I'm surprised the stock's below $8 right now in pre-market. That 165 EBITDA does not include anything from Dilly or any growth prospects. So it's reasonable to assume that 2025 EBITDA will be well north of 165, the run rate that they have now. And I don't know what that number would be, but it wouldn't be unheard of for that to be north of 200 million again, or well north of 200 million if they get the third government contract with 165 as the floor. So you're paying right now at 8 sub 5 times EBITDA with no value for Dilly and no value for any growth projects. So yeah, I think the stock's incredibly undervalued. I'm not selling any. And, if I didn't know where it was trading, I would think it would be $9, maybe even $9.50 right now. Because for me, I think the 1080 to 11.25 has a 80 to 90% chance of happening now. I was at 50% before today's update, and I simply just don't see how a deal doesn't get done. This wasn't enough of an EBITDA hit to derail the business. It wasn't enough of an EBITDA hit or to show business risk, right? So everyone's worried about business risk now. Can the government just cancel contracts? The other contract's nothing like this contract, and it was just signed last November. So yes, your first reaction would be this business should have a very low EBITDA multiple if government can just leave, on a whim's notice. they've been doing this for a long time. And again, that contract to me seems much more stable and secure. Plus, they have business outside of that contract with a diversified group of oil and gas customers. And I think they have a pretty good shot at getting the third government contract. They got the second one. And, the value of this enterprise as a business that gets government bids is worth a lot. They were not running the last facility that got canceled, and it was clearly over earning, right? Because both public companies were each making $40 to $50 million a year from it. And I don't know what the CapEx was to build it, but it certainly wasn't $1 billion. It was a very high return on invested capital that was going to those two companies. I think I said before, you probably could have had Target run this with their nonprofit partner that they have now, and they could have made 40 million a year versus the combined, whatever it was, 80 to 100 million, and then save the government a lot of money just from that happening. But that facility didn't make sense for what they were housing the people for anymore. But that facility might make a lot of sense for the third government contract. So, I try to think about what can go wrong here. We get earnings in a month. We know the earnings now, so there's no earnings risk anymore. We get earnings in a month, and they drop the bid then, right? They just can't come to an agreement on price, which again, I don't know how that would be now. They specifically mentioned the 1080 in this press release, which they did in the last earnings press release too. I just don't think they put that in there, or someone asked me if they have to update by law if they've changed their bid. Well, it goes back and forth for months, but it usually goes at a price higher than the 1080. So at a price higher than the 1080, they don't have to update that. But if they now no longer want to pay 1080 and they want to reset expectations, they almost certainly would have had to do a 13D saying that they have a new price they want to pay. I shouldn't say with any certainty that would be the case, but I'm sure they want to pay at least as much as they can. Don't get me wrong. And I'm sure they're trying to tell the special committee that they should be thrilled with 1080, that it's not even worth that much, yada, yada, yada. But I don't know how they can get away with paying less than 1080. Again, it's very hard to know what the unaffected is, but the premium at 1080 versus 740 or 750 or 8. I mean, full information wasn't given until today, and you don't know how much of this is the bid in this stock price whenever it closes at today. So at the end of the day, you have to just kind of do financial analysis, and are they comfortable with paying 6.55 times EBITDA? Again, with no value for Dilly, which is worth at least $1 a share, $100 million, and no value for any of the pipeline. And they already own 65% of it, and they could use their debt capacity to fund the entire 375 million to 380 million they need for the minority. They don't have to put up any equity. It would be like 2.5 times EBITDA to borrow it all. And then you deliver rapidly, especially if the EBITDA is going to go up to 200 or 250 the following year. So yeah, I'm very relieved, very relieved. And the black swan would be they kill it next earnings, and there's no replacement of news with the killing. So they don't tell us that they have a new contract or anything like that. Let's say the stock's 850 or 9. When they do that, I would think the stock does not go to 6 again, but goes to 750 or 8. And even then, it's like I said, it's sub 5 times EBITDA. Glenn, you must have came on late. I think it took so long because they had to have been trying to figure out whether or not the bid was going to die or not. There's no other reason for it to take 2.5 weeks. We all figured out the EBITDA in a day, and we don't even work for the company. So I think they wanted to update the market with also updating them on the bid. And it's possible also that we're really close to a deal and they just couldn't get there yet. But I think it's more likely that they had to hunker down, see where they were in negotiations with the company, see if the sponsor was still interested in buying the 1080 or whatever they're negotiating the price to be. And they came away with the answer is yes, that they're still highly engaged and motivated to get this done at a lower price than before, but still 1080 or above. And that's what they needed time for. I certainly don't think next week we're going to get a 13D that says the bid's dead. I just don't see what the incentive would be for the sponsor to do that, right? They're not trying to create volatility in the stock. Like I said, they will for them to make the most money if they're not interested in buying this anymore. It's to buy back stock, and you can't buy back stock with the bid open. So it incentivizes them to kill it now so that they can then repurchase stock, unless we're in a window, not in an open window, because it's the end of the quarter. So look, if we get to the next earnings call, which is 4 or 5 weeks from now, and they still haven't killed the bid, I would even up my odds even more that it's going to get done. But I think it could get done by the next earnings call. It's hard to time this, right? It's been 8 weeks now from when the special committee was formed. It's been 12 or 13 weeks from when the original bid came. The odds that there's any third party that's interested in this now is pretty low, but not zero. So they're more likely just negotiating with the sponsor. And that back and forth doesn't take months. It takes time to reset after what happened 2 weeks ago, but it does not take months. So I firmly believe that because they're going to have a majority of minority vote, the committee is completely guarded. That's the wrong word. The committee can be comforted by that fact, right? That if shareholders are angry at the 1080 or 11 or 1125, whatever they sell it for, shareholders could vote it down. And we all know that won't happen. It will go through at that price. And I'm sure they're being advised that by Centerview. And I don't know what the 5% shareholders are telling them, but I'm sure they're much more open to selling now or rolling with them at those prices than they were before this news. So at 810, I mean, it's like 3 up, no down. I mean, I think it'll be at this price point on a break. Again, it's 5 times EBITDA here with no value for Dilly and no value for any of the growth projects they have. And if you're the sponsor, you can't get this again. So let's fast forward a year from now. A year from now, they likely will have more contracts, and they probably got the third government contract. So if they're doing 250 million of EBITDA, they're clearly not going to be able to buy the company for 1080 or $11, 1125. That's the way to view this. Don't look at the current EBITDA. Look what it's going to be doing a year from now. And they know this, so they will pay for some of that EBITDA. If they don't buy it now, I think they will never buy it. And you'll more likely see a sale of the entire company in the next 24 months once they get the new growth projects in place. And the sale of the whole company could go for $14, $15 then. Because that'll be what the math is if they have 250 million of EBITDA. So this is the analysis that they're doing in the boardroom, the private equity firm. Do we want to keep our 65% and then sell the whole company in a couple of years? Or do we want to clean this up now? It's a controversial company, take it private, grow the EBITDA, and sell it to another sponsor. And I think it's much more likely they do that. And that's why they bid for it in the first place, by the way. They could have sold the whole company in March, right? They control the company. So for them to bid for it versus just run a process and sell it shows you what they want to do, which is acquire the remaining 35%, grow it, and then flip it. Open to any pushback anybody has, but it's just all good news. I mean, I was worried that the EBITDA would be more than 40 million a hit. It wasn't. But I was mostly worried that this was enough of a shock to the system for a TDR to walk. And maybe 1080 was a little bit too much for them. If I think this was going to be sold at 13 before, they're going to save 220 million on the purchase price, which is a little more than 5 times the EBITDA they lost. But if you value Dilly at 100 million anyway, then if you use a 6.5 times multiple on the 4, you get to like whatever 260 or something like that. But you're not going to lose 260. You're only going to lose 160, and 160 is $1.60. So if they would have paid $1.60 more than the 1080 before all this happened, which I think they would have, then there's no reason why they can't pay the 1080. It's the same multiple. It's the same takeout multiple, the 6.55 times. Anyway, very relieved. Very relieved. And we'll see what happens. Any questions? Can't believe I got 2060 right now. You guys are champs. I would think it happens in the next 4 weeks, but it could take up to 8 weeks, I guess, still. At this point, there's no due diligence being done. They own 65% of the company. So obviously they're going to be nervous, or they were nervous about the big contract that gets renewed in November. So there's probably been due diligence done on that, whether or not that's at risk. But I can't imagine that that this drags on for a long time. I did not expect the deal today. I thought you'd have to put out updated guidance first before you could ever actually sign a deal, because we don't have all the information that they have. I was hoping we get a deal today, but I didn't expect a deal today. It's also only been 8 weeks since the special committee was formed, and they were 6 weeks in when this news dropped. So I would think you have another 4 weeks left, 2 to 4 weeks, something like that. But I won't be concerned if we get to the end of July. If we get to next earnings and we don't have a deal yet, I'll be obviously nervous that the deal dies with the earnings. But I won't be incredibly nervous, because I really think this gets done now. I'm up in my odds from the 50% I was to I'm 80+% now that a deal gets done, somewhere between 1080 and 1150. But more likely, much closer to 1080. But I could see a kiss too. I could see it being a 20 cent, $11, $11.25, just so this looks like the special committee extracted something from them. And I definitely don't think they're not going to do it over 20 cents or 25 cents or 50 cents. It's a complete rounding error to all this. 50 cents is literally $17 million to buy out the minority. 50 cents. $17 million is not going to hold this up on a $1.1 billion market cap enterprise value. That's a 0.1 turn of EBITDA, $17 million. So it's not going to hold it up. All right. Peace. I'll do another YouTube next week on BBIO for all of you that missed it, but I'm very enthusiastic about BBIO. I think that it's a huge opportunity here. And the market's really got this one wrong. So that's the teaser for those of you who didn't get to watch my one that they took off YouTube. All right, everybody have a nice day. Take care. Thanks, Jason. It's nice of you to say.